So my profiteers, have you ever thought, how is it that when the market goes down, we're not able to time when it goes down to sell our investments? Or when the market goes up, we never get it right? Well, this one indicator might allow you to time the market. We don't always get it right, but it might be an opportunity for us to find out before the market starts going down when to sell, and before the market goes up when to buy. Before we get started though, like, subscribe to our channel as we continue to grow. Of course, Mario Payne, your beautiful Jacksonville, Florida, certified financial planner, managed over $250 million in assets over my career. And today we're going to go over what indicator might help us get to the bag or not fumble the bag before the market goes down. Now, this is from our good fellows at Bloomberg. Some people say Doomberg because on their channel it's fear, and more fear. But let's go over a put-call ratio. What exactly is it? And as investors, short and long-term investors, how we can use that to our advantage.
The put-call ratio is an indicator that plots put volume divided by call volume. So
first off, what is a put and what is a call? So this is options. Now, of course, options are more riskier than stocks. So you want to check your risk tolerance questionnaire before you do any options. However, a put is when you're betting that the market is going to go down. So let's say, theoretically speaking, we have Apple, and Apple's worth $100. And you think Apple's going to go down to $90. Well, you put a put on that, hoping that it goes down. If it goes down, you make money. Now, if it goes up, you lose money. And with the option, you can maybe even lose it all. So be careful, but that is a put. A call, on the other end, we think that the market's going to go up. So again, using Apple, we have Apple at $100. It goes to 110. If we have a call, possibly you're going to make some money. Compared to if it goes down, you're going to lose some money. So a put is you're putting your hopes that the market's going to go down. A call is that you're calling your shot, thinking that that investment is going to go up.
Put-call ratio value is lower than 1. This means that call volume is higher than put volume. However, a ratio of 1 is not an accurate starting point to measure sentiment in the market because there are normally more investors buying calls than buying puts.
Now, this is true. So with that ratio, it's usually more calls or more investors thinking that the market's going to go up compared to puts thinking that the market's going to go down. And yes, historically, the market goes up over 75% of the time. So over a 5-day time period, 3 to 4 days, the market's going to go up. And then over that same 5 days, 1 to 1.5 times it goes down. So theoretically speaking, just on average, now history does not guarantee future results, but it is an indicator. You would think that more people are going to do calls thinking the market's going to go up than puts. So that could be deceiving, but you get our drift.
Typically, an average put-call ratio of approximately 0.7 for equities is considered a good basis for evaluating sentiment. Traders can use the indicator to determine market sentiment because it gives information about the overall expectations of a decline or an advance.
So that being said, so if it's a lot of puts, right, then that means that it's a lot of bets that the market is going to go down, right? So we look at that ratio as a contrarian, like Warren Buffett. If that put ratio is very, very high, above 0.7%, at 1.5, 1.7%, and so many people are betting that the market's going to go down, market's probably going to go up, right? If a lot of people are betting that the market's going to go up, it's going to continue to go up, it's going up, and people that are late to the game are buying now calls, think it's going to go up even more. If that ratio is very, very high, then guess what? Market's probably going to go down. Historically, that happens, which we'll talk about.
When the ratio is at extreme levels, it may indicate an overly bearish or an overly bullish sentiment.
Correct.
For this reason, some traders and investors use the put-call ratio as a contrarian indicator.
Man, I didn't even see this video, right? So somebody knows what he's talking about.
The indicator rises typically when the market is bearish and can actually be a signal that the market is due for a turnaround. A high ratio can be a sign of a buying opportunity for a contrarian. Conversely, the indicator declines when the market is overly bullish and can be a signal that the market is due for a pullback.
So there you go, right? The market is just going up like crazy. More people are doing calls, and that put call ratio and the call portion is up dramatically. Then guess what, profiteers? Might be a time to get out. And let's look at the charts to see why. Okay, my profiteers. So here's an example of the put to call ratio. So here at the bottom, we have a range, right? The range is between 0.7 and then, of course, always 1.3%, right? In the middle being 1. So again, remember, 1 always going to be greater because more people bet that the market's going to go up. But the calls are always going to be higher. The puts, lower, right? And as we can see, we can use this. And as we use this, we'll go back, right? We pinpoint 2022. As you can see, anytime, in my opinion, we're at 1.25 or more, that is extreme, hence the red lines. Meaning that it is a high possibility the market's probably going to turn around because so many people are greedy, right? When so many people are greedy, they put in more calls thinking the market's going to go to the moon. That's usually an indicator you probably want to take some profits. And it happened, right? January 2022, we all know what happened then, right? Once this red happens, look at that over the next 6 months. Market S&P wise down by 16.5%. Here as well, went down 12%. Here as well, went down. This is all weekly, right? Weekly charts. Right? So again, this is basically 3 weeks worth. This is 1 week, right? And as we look at the market as well, right? Here, each time we had this indicator, right? It's about a 5% drop, right? Here as well, same thing. Oh, we're on a weekly chart. Y'all get the drift, right? Here as well, right? 8%. Then, of course, here, not as much, right? 3.5%. So this is the indicator, right? And if we even scroll, look what just happened, right? So we had this indicator happen March 18th. March 18th. Man, if we had this conversation a month ago, would have saved you guys money, profiteers, right? Because as we can see, as this hit, really at its high, market now down 5%. Feels like it's way worse, but down 5%. So that is the indicator. And each time it's in red, as you can see, we have the 1 point. So this is an indicator that we can use. So my profiteers, I hope that gives us some great examples of what one indicator we can use to kind of get out the market as more people think it's topping, right? As everybody just herds in when they hear good news. Now, one thing we might want to use this on now, Bitcoin, right? Bitcoin right now, a lot of enthusiasm in Bitcoin. The real tail investors have not hit the Bitcoin yet, but I think that's going to happen as the halving moves on. So that might be an indicator we look at a Bitcoin standpoint, as I believe Bitcoin will be pushed up maybe $100,000 coin by the end of the year. So we want to use that indicator to see if it's a good time to get out before it goes down. But below, the put call ratio, we like it, don't like it. Let us know your thoughts. As always, love. Let's make some people profit together, y'all. Peace.
And you just wanna get paid. Tired of making no money mistakes. Make a payment on your bills and you still late. Yeah, pay for profits to help you seek change. And you just wanna get paid. Yeah, tired of making no money mistakes. Make a payment on your bills and you still late. Pay for profits to help you seek change. Yeah, cut the show and just listen. You wanna feel empowered by making money decisions. Residual by the hours can get you a better living. Been check to check, you know, and it could be different. You know.